Hello, this is Scott Bear with Mortgage Pro, a branch of American Pacific Mortgage. We're the largest broker network on the West Coast, so that should be something very comforting for your buyers, as well as my realtor partners and maybe even current clients that happen to be watching this video. This is one of my many loan product videos I put out for my clients and realtor partners, and hopefully you'll learn a little something. This is on conventional loans. This should be a rather short video. There's nothing necessarily special about a conventional loan per se. It's more of an all-encompassing term that stands for pretty much anything that isn't secured, any type of a loan that isn't secured by a government agency. So, for example, a 3-year fixed arm would be a conventional loan. A 5-year fixed arm would be a conventional loan. A 10-year fixed arm would be a conventional loan. A construction loan would be a conventional loan. Another thing that might be somewhat specific to conventional, the minimum down for your typical conventional loan would be a 5% down. It used to be 0, then went to 3, now it's at 5. The credit markets have gotten a little tighter as of late, and they won't allow such low down programs as they used to on conventional, but 5% down is still a very good program. Another thing that is very common for conventional, common for other programs as well, but something that is worthy of being noted would be a 3% seller covered contribution that is allowed to go towards closing costs for the buyer. So say a $100,000 loan amount, the seller is allowed to cover $3,000 of the buyer's total closing costs. So that can be very helpful. If you have a larger down payment, that actually goes up. It can go up to 6%, even 9%. But of course, closing costs in the 6% to 9% range, as far based on the sales price, would be unbelievably overburdensome to the buyer. It's not to mention the seller. Typically, those costs aren't going to amount to any more than 3 to 3.5% anyway. So, a typical 3% seller covered cost allowance would be typically plenty to cover most of the closing costs for a typical buyer. Another thing that is a little special or maybe specific to conventional loans is your interest rates on a conventional loan are going to be the best possible rates that you can get. There's no special add-ons or price premiums that are added on to a conventional loan typically, such as, let's say, VA or FHA or USDA. All those loans have different price premiums that on occasion can make their rates slightly higher than conventional rates. So on a conventional program, your typical conventional program, you'll get the best possible rates you will normally get on any given program. So that's a good thing about conventional. Other than that, that's about all as far as conventional loans are concerned, all-encompassing terms. So hope you learned a little bit, and I hope you take advantage of the day and make it a successful day and have a good day as well. We'll talk to you soon. Bye-bye.